and I'm very happy to welcome everyone to this session today. On behalf of the Board of Governors and members of CFA Society Nigeria, I'd like to welcome you all to the webinar. We'll be talking about essentially deconstructing economic theories today, theories around protectionism versus globalization, and the best approach for Africa in the aftermath of the global health pandemic. We have with us a seasoned speaker and industry leader, and we're very excited to be able to draw upon his wealth of experience today. So I won't take too much time. I guess we'll just jump right in, and I'll hand over to the moderator for today, Yemi.
Hi everyone. My name is Yemi. I'm a member of the CFA Society Nigeria, and I'll be moderating this session. And as Damilola has said, we're really trying to figure out. We've heard you hear in the papers and the news the response of countries in the EU, in America, to COVID-19, and sort of plans for the future. And this is an opportunity for us to hear from a subject matter expert about. Sort of how, first of all, how have we been responding Africa-wide, maybe Nigeria in particular, but also how should we be responding? What are different directions we could take? Should we be trying to secure our global supply chains, make tighter collaboration with the onset of Africa Free Trade, Continental Free Trade Act? Should we be trying to invest more in that, make it work? Or should we be trying to secure domestic supply, self-sufficiency, which could be misinterpreted or take the direction of closing up our borders, a direction we're already going. So we're hoping this discussion would tell us, would enlighten us and help us make better investment decisions and give us a better outlook for where our continent could be going, especially our country, Nigeria. So a couple of housekeeping rules. We're going to make, this is going to be a very interactive session. We have over 113 participants. Sonnie, I'll introduce our speaker soon. He will maybe give his opening remarks, but after that, we really want to engage with everybody that's here. So you get the opportunity to put your questions in the chat group. Hopefully everybody is comfortable using Zoom. You can ask questions in the chat using the chat function. You can, when it's time to allow people to speak, you can hit a button to raise your hands, and then you'll be unmuted. You'll be allowed to also speak. So, and this is just what we're going to do throughout for the time that we have. Rather than having a long lecture, we're going to have an interactive session, as it should be. I know we're kind of used to that in the CFA Society in any case. So I'm going to introduce our speaker. Sonnie Ayere is the founder and group CEO of Dunn, Loren, Merrifield. Used to be Dunn, Loren, Merrifield, now the DLM Capital Group. Sonnie is an investment legend in our markets from his time as a pioneer CEO of UBA Global Markets, now United Capital. His bio is long. All I just remember is that he pioneered bond trading as we knew it. He was one of those people everybody wanted to work for, because you would work hard, but you would learn. He's a pioneer in our markets, and we're very, very, very lucky, very, very fortunate to have him. So welcome to the session, Sonnie.
Thank you. Can you hear me? Thank you.
Yes, we can.
Very good.
Okay, so I'll just give you time to make your remarks, what you've seen. We have things going on in Europe, things going on in the US. Where and maybe we've not heard as much as what we are doing here in Africa, Nigeria, and what we should be doing. So let's just have your opening thoughts, and then we'll take it up from there.
Okay, thank you very much. I mean, look, the response of countries to COVID has been very varied, as you know. I would look at two extreme countries. I would look at the US, and I would look at what we've done in Nigeria. If you think about it, Nigeria has kind of just more or less mimicked what's going on in America, to a certain extent what's going on in the UK. So in other words, they close border, we close border, they open up the borders, we start opening up our borders, et cetera, et cetera. The reality is that America can afford to put in the amount of stimulus that they've done, which obviously is a lot more difficult for the African continent to do, principally because obviously we don't control, or let me put it that way, our monies are not convertible, and there's obviously a limit to what we can do depending on the amount of foreign exchange that we have, reserves, and what we earn. So there is a limit. I have to be pretty honest that I'm actually happy that what's happened, at least on the African continent, is nowhere near what people had thought will happen. I mean, you heard what happened with the statement from Melinda Gates when she talked about, seeing dead bodies just lying everywhere in Africa. I think there are reasons why. There are those who would debate for and against as to why that hasn't happened. My simple theory is that when you hear people who've actually gone through COVID, it's more like an advanced kind of malaria, but then attacks the lungs. So when you look at, and I look at the African-American population who actually been the most affected in the US, they live, the lifestyle is very closeted, projects, etc. You have mostly, they feed on or eat processed foods as opposed to organic. And that's obviously been a factor. And of course, if you look at the way Nigerians have actually been able to weather the storm, there is that health factor that we should not discount. So going back to the financial side of things, I think that, the US was very slow, even though in terms of its response, closing borders, taking the disease seriously, they were pretty slow in their response. And, it obviously came and it hit them pretty bad. We, to a certain extent, I would say we were a tad slow because we could have been much faster. I mean, if you look at countries that actually closed their borders very quickly, like Rwanda, for instance, the impact was
much more
muted, exactly. So the amount of if you look at Europe, where they've been lucky is they've had the financial muscle, whether you want to call it through, what's this? Trying to remember what it's normally called again. I don't like it, but it's done by most central banks, and that is the when you keep printing money.
Yeah.
No, printing
money.
Exactly. But it's given a nice name now, quantitative easing.
That's right.
Okay, and so by quantitative easing, you've looked at the response has been rapid. Look at Spain, for instance. I was looking at the football pitch that was turned into a intensive care center, and so on and so forth. So they've had the response, and they've had the European Central Bank support European countries in the response to it. I think if we had the same level of, if it ravaged to Africa the same way it ravaged to Europe and America, I think it would have been disastrous for us. And I mean, it's my own opinion, I don't think that we had the financial muscle to tackle that.
Correct.
And for somewhere or the other, we've been spared that. And I think it's now a case of looking at how do we as a country respond post-COVID to ensuring that we are that we're able to ride the economic wave that comes in future.
Okay. Before that, thanks, Sonnie, for that. Before that wave, where we can start to ride the wave, do you have any thoughts regarding this sort of, it seems like the primary effort African countries are putting into this recovery globally is seeking debt relief, debt restructuring, simply because public budgets have been decimated. Revenue, internet generated revenues has sort of gone down tremendously because of impact of COVID. What do you think? Is that the first order of business, and will it get us anything tangible in terms of helping the economy restart and jumpstart?
Nigeria needed that 3.4 billion. We needed it. I mean, we need that emergency cash flow. Why is that? The first thing that happened, remember, there was that double whammy. There were a few sequence of events that occurred. First was the feud between Russia and Saudi Arabia on oil, right? That was the first thing. What that did immediately was do what? It depressed oil prices. Then you had the advent of COVID, which basically industries just dropped, right? So the use of the need for oil, one was, so demand drops, price drops.
That's right.
So, and you needed the revenues to keep the economy going. So that emergency loan that came from IMF was essential, right? And I think if we hadn't gotten that loan, things could have been a lot worse. At least, can you imagine if we had to dip 3-4 billion out of current reserves, what that would have done to the currency, all right? So I think the central bank response and also the Ministry of Finance response was appropriate at the time. And to the extent that industry picks up, in the next 3-4 quarters, then the ability to repay that becomes normal. I mean, you have to note that regardless of how much Nigeria has borrowed, right, our debt to GDP ratio is still much below our peer group.
Correct.
Yeah. So the problem we've had is that the cost of borrowing has made debt servicing expensive.
Very true.
So if you think about it, if you look at, if you think about Nigeria's sovereign bonds, at least up till now, we've only come from about 16-17% to about 11% for our risk-free rate. Okay. So when you're borrowing that amount, when you're repaying interest at that amount, that makes your debt repayment expensive. And that's really been the issue that IMF has had with the Nigerian borrowing program. It's not the quantum of debt per se, it's the fact that, it's expensive to repay, and therefore it's gulping a good percentage of what? Your OPEX. So to my mind, to answer your question, was the response correct? Absolutely yes. The only way that could have been avoided was if we had excessive reserves, which we have. I mean, our reserves are not bad. I mean, our import cover is okay, but it's not excessive.
Okay.
So we're more or less at the borderline. Yeah. Okay.
So coming to some of the, and maybe this question you could talk about, not just Nigeria, but other countries. Given now we've sort of seen how you've sort of seen how tightly integrated we are with the world, everything from airlines to hotels to manufacturing and all that. What are some of the sectors that you think have been hardest hit and will continue to be post-COVID, and some of the sectors that you think that we should rebound and will sort of adjust or sort of flex and bounce back in some way or the other?
If you ask me, I think, look, Nigeria, from the way it integrates into the world needs a total reset. And I say that because, for one, I remember being in some discussion with some, older, more experienced men and women a couple of years ago, and they talked about how we missed the boat. If a country doesn't have a steel industry where you're able to cast, your ability to manufacture and become an exporter or part of the global economy becomes almost impossible. So you're trying to do, in other words, when you talk about self-sufficiency, right, it's not just about being able to export what you have, it's also be able to do what? Add value to it. Listening to, what's his name, the current president of the African Development Bank talking about the cocoa market and saying about, I can't remember how big the market was, but it's a major big market. And the fact that Ghana, who is the major cocoa exporter, only gets 2% of that market.
That margin,
Yeah. Another good thing he talked about was the fact that the price of cocoa goes up and it goes down, but the price of chocolate never goes up or goes down. Yeah. When you go in and buy a bar of chocolate, it's, whether it's 2 pounds or 5 pounds or whatever, you buy it at that, right? Yeah. But then cocoa, one price, or it's this and it's that and it's whatever. So reality is, and the reason I say this and why I'm starting from this premise is because there is sort of like steps that a country has to take, yeah, to get to a point where you become globally competitive. So why, for instance, is Nigeria import dependent? We're import dependent because when you look at the way the country is set up, it is cheaper for most commodities anyway, or for most items, for me to import it than actually manufacture it here.
Yeah. So,
to my mind, yes, there are industries that will thrive. If you look at industries that have, I mean, at least in Nigeria, whether it's financial services, the fintechs, that would actually ride on technology, will ride on population, and so on and so forth, that would be fine. But when you look at industries that actually need to add value, create jobs, let me say the underlying mechanisms required to get those industries operating are still not there. Basically, and then going back to the issues of what? Infrastructure.
Infrastructure is still missing.
Yeah. So, we've talked about, and when I talk about infrastructure, it's not just your hard infrastructure. Hard infrastructure is, yes, your power, your roads, logistics, and so on and so forth. One of the biggest problems we have in terms of opening up our economy is also soft infrastructure.
Yeah.
What are soft infrastructure? Things that need to be done to open up a simple company, right? The amount of red tape that is put in by government to achieve things. How many hoops do you have to go through to perfect property? I sell my property to you. It takes me how many years just to change the name of the owner from my name to your name? Things like that, right? So these are the issues to me that we still need to tackle to achieve what you are looking to do, which is, should we be looking at more protectionism? Should we be looking at more competitiveness? You talk about, for instance, the free trade agreement with Africa. Not a bad idea. But reality is, if Nigeria doesn't become an exporter, we will become a dumping ground.
Yeah.
Because of consumerism. So there are a lot of people who look at that agreement and say, yes, there are positives because, those positives can only be realized to the extent that Nigeria as a country can also morph into becoming one that's able to produce and export. If not, you just open up your market and what happens?
Yeah.
Goods just coming from everywhere. Exactly. And then what happens is, especially countries that are now able to create a manufacturing base that is cheaper, the ability of Nigeria to compete becomes almost impossible. And then you remain what? An import-dependent country. That's how we see it. Yeah.
Wow. Okay. Thanks, Sonnie. Heavy words. It's all right. I think we have a poll that can go around now. The first set of polls should go around for people to just sort of take the temperature of what we think of what's going on. Is that ready? First set of poll should pop up soon. While after that, we'll take on the second round of questions from, actually just maybe one set of questions from me, and then we'll open up the floor to everyone.
It seems we've done a good job. There are no questions.
Okay. I guess people, again, so folks should start thinking of their questions. We're going to take a poll, and then we're going to take a series of questions. I see 2 people raising their hands.
Yeah.
Let's see. I will get you in a moment. 3 people raising their hands. We'll get to you in a moment. Society office, are the polls ready?
Yes, they're ready.
Okay. All right. Awesome. All right. You should have that in front of you, and we'll just have a minute for you to just get your response. All right. All right. Please go ahead and do so. About 50 something people, 60 people out of 124.
Very close.
All right. All right. How many people have responded? We have about 105 responses. 100 out of 146. I'll leave it on for 30 more seconds and then we'll close. Well, that's assuming it continues to inch forward. If people stop, we'll just end it. Okay, going, and gone. Thank you all. Okay. All right, so the question was, first question was, do you think African sovereign states have demonstrated resilience in the face of the pandemic? About 58% of us thought yes, that they have. About 43% said no, they haven't. So that's fairly tight. I guess it depends on the region you live or what you've heard in the news. Yeah. And the second one, I think Sonnie just spoke about that at the tail end of that conversation. Do you think the implementation of the Africa Continental Free Trade Agreement could improve supply chains? And overwhelmingly, 87% think yes, it would. And 40% said none at all. So again, thanks all for participating. There was about 110 people participating. I think Sonnie's last point on that, on the Africa Free Trade Agreement makes sense in that it does help supply chains, but if you don't gear up your country to be ready to participate, you could end up being on the losing end of globalization.
Absolutely.
Thanks for that. All right, I'm going to close this and move on. Thank you. So you talked about the, and you can start typing your questions now. I'm going to ask one more question of Sonnie. Start typing your questions. I'll come to the raise hand. When he finishes asking, maybe answering this question, then we'll go to the forum. You talked about all the things that governments therefore need to do in order to win at free trade, in the free trade agreements and things like that.
Yeah.
For a country that is struggling to have revenues or to generate revenues because everything is just tight and locked down, what are the alternatives for GDP growth? Considering your GDP formula is consumption, investment, government spending, net import export. If government spending is constrained, what are the realistic options for countries in Africa, for sovereign states to generate some funds to come into the country to sort of to get the economy flowing, whether it's credit, whether it's investment to create jobs, to expand, and from the government or PPP standpoint to build some of this soft and hard infrastructure? How do you think they can proceed?
Okay, so let me give an example, right? I think that the Nigerian economy has spent too many years depending on government spending, and that there has to be a firmer and better handshake with the private sector. Reality is, we, in a way, we've kind of like, I sometimes, I remember when I'd listened to, monetary policy speak and talk about how difficult, they find the economy in terms of, every business is their own local government. So you have to find your own power, your own this, your own that, and so on and so forth to operate. I give an example. The biggest component of Nigeria's inflation is what? Food, right? Food inflation. Okay. We throw away about 60% of what we harvest.
Wow.
Every year. Are you aware of that? Are you aware of that? Yeah. About 50-60% of what we harvest is actually thrown away because we can't store it. We don't have it. Yeah. Now, I think about something. Supposing we decided to create somewhere in the Middle Belt some form of solar city. Yeah. And invest in a solar city that then allows us to have all kinds of silos, dryers, etc. Create the logistics, right, that allows for produce to then be stored, so that within 2 years, a lot of food supplies in our food banks. What do you think would happen to food inflation?
Drops.
It will drop. If food inflation drops, being the major component of inflation, what happens to inflation?
Inflation drops as a whole too. Yeah.
If inflation drops, what the pressure on your interest rates, what happens to it?
It goes away. Well, mostly goes away.
What then happens to credit?
Then you can expand credit to.
Absolutely.
To
and when you expand credit, what happens to the economy?
The economy grows. Jobs, expansion, investment in machinery, jobs, consumption, disposable income, virtuous cycle.
Do I need to continue?
Okay. Thanks for that. Very, very well put. I'm glad to have been part of that answer. All right, I'm going to just unmute a couple of people one by one. Damilola Kareem, I think your hand was up first. Ask your question, and Sonnie will get you.
Good evening, everyone. Hi, Sonnie. Thank you for the insight you shared so far. I'm very well. I have a question. So the question I have is that one of the major themes in the world right now has been localization over globalization. So people believe that there's been a lot of reshoring, given the fact that we, US, for example, and the ongoing US and China's, trade war has actually escalated into, what's going on in Hong Kong, where the financial hub is being, is now under pressure because of the ongoing war. So now the question I have is, given the fact that all of this localization, companies are returning back to their countries.
We're losing you.
We're losing you.
How the African continent, especially Nigeria.
Can you repeat the question again? We lost you.
We lost you there.
Oh, okay. So I was using the ongoing problem that's coming in Hong Kong and the localization theme that we have now to ask about how this translates into growth, in the African continent, especially a country like Nigeria. So what are the opportunities that we see, based on this localization theme? And the second question I have is around what you mentioned about fiscal spending. In a situation like this, do you think monetary policy is going to be a better way, given the fact that, government spending is what most economists will say to be the most effective tool in handling a crisis like this? Thank you.
Okay, I got you. All right. Okay. So if I hear you right, the first question was basically localization vis-a-vis integration or integration into other markets. Am I correct? Hello? Can I get him back?
Dami,
yeah. Am I correct? My interpretation of your question is that you're asking whether localization for an economy is better than being more open, having a more open economy, and in particular with respect to Nigeria. Am I correct, Dami?
Dami, we lost. Oh, yeah, you are unmuted. Please go ahead.
It looks like he's muted.
Oh,
okay, let's assume that's what he said. Yeah. So what I would say is this. Like everything in this world, there's always an advantage and disadvantage to whatever step you take. I'll give an example. Take South Africa. South Africa's development actually started when it actually closed its borders. Do you know that Nigeria actually had TV before South Africa? Do you know that?
No.
Okay, so what was it called now? I think it was Western TV, yeah? That was the first in Africa. We were the first to have TV in Nigeria before South Africa, yeah? Even I think in terms of a tall building, Cocoa House was the first tall building in Africa. Yeah, 26 stories if memory serves me right. Now, so that tells you how far we were from South Africa, yeah? Then apartheid came in, countries then decided, you know what, we're not doing business with you anymore, and they had to then shut their borders and then look inwards. That looking inwards is what made them now do what? Create what is necessary. That's what created the fabric of what belies South Africa today. Take Lagos, the simple Lagos that we all live in or enjoy, right? And this coin, I mean, you must have heard it. Everybody we have 152 participants right now. IGR.
Yeah.
IGR wasn't popular before Lagos started having IGR.
Correct.
And how did IGR start? Because Lagos, at one point in time, Obasanjo said, you know what, we're not giving you your FAC anymore, your federal allocation monies. And Tinubu came back and said, guys, we need to look inwards. Okay? And by looking inwards, dude, how can we find revenues to run Lagos State? Well, we have businesses, we have industries, the law allows us, so let's start taxing them.
Correct.
All right? And that's how Lagos got to where it is today. So the point is there's an advantage in looking inwards and localization, because that is what makes you create what is required to drive your economy. And reality is, if you don't localize before you go, let me say, it's like saying, if you don't create what is important before you go public as a company, then, competition will just basically shred you. In other words, you wouldn't have what is required to fight in the markets. So any country that says, I want to open up my market, yeah, except you are in a position to compete such that it's now you're talking about net exports. I'm exporting, I import, but my export revenue is more than my importing bill. Yeah? You're going to be running what? A deficit.
Correct.
So when people talk about, Nigeria, open up your borders, whatever, I mean, look at, I think it's Abakaliki and the rice producers.
Right, yes.
I mean, look at how that changed because the border was closed. And for the first time, they actually had a thriving industry. Prior to that, they couldn't compete with rice coming in from, neighboring countries. Absolutely.
Yeah.
Exactly. So to my mind, I think that there is a benefit in Nigeria actually looking at how do you, create what I would call the enabling environment to ensure that the country itself can compete on the global trade market before markets are opened up. We cannot continue that on a system that basically says what we export are basically basic raw commodities.
Okay.
Right? So yes, I'm all for the fact that Nigeria diversifies its economy. I like the push into agriculture. I think that would be a major growth avenue for the country in terms of forex, etc. In other words, it's like taking us back to the 60s. I remember when I was in secondary school, and we used to read about the the granite pyramids.
The granite pyramids.
Yeah, the granite pyramids, the heights and scale.
Sonnie, somebody.
Oh, sorry, that was, yeah, sorry, it's fine now.
Okay, all right.
Okay.
You're talking about the cocoa pyramids of lore.
Yes, exactly. So in other words, not just about cash crops and food crops. So you had food crops that were just consumed, and then cash crops that were exported for FX. Exactly. So I'm very much in favor of the country moving in that direction. But at the same time, right, we need to be very careful, especially when we think about this whole Africa Free Trade Agreement, that we have to ensure that Nigeria's ability to create, to produce, and export is made a priority. Okay. If not, we will continue to become a net importer, and the pressure on our currency will continue.
Okay.
Yeah.
Okay, fantastic. And I think, and that makes a lot of sense, Sonnie, in terms of even when you're thinking of diversification, I've often heard the point that we need to ensure that the products that we produce are world-class and exportable so you can earn FX. And in order to do that, you have to make sure that the business environment for that investment, local investment to start with, foreign investment as a secondary consideration, it needs to be there.
Yes, correct. Correct.
Solid.
So,
Okay.
I mean, look, if just to add to this, right? If you look at the way the Americans, the British, even the Germans, and so on and so forth, who have developed strong manufacturing arms, even whether the manufacturing is happening in the US or offshore because of cost of labor. The reality is, right? I still ask myself a question: why government does not understand, right, how important it is for them to put their balance sheet behind the private sector. What do I mean by that? I'm not saying government lend to the private sector, no. I'm saying that, for instance, you should have things like small business loans that are issued or funded by banks or otherwise, right, but are basically backed by the government's balance sheet. That's how the government supports the private sector, right, in growth.
Correct.
You see, exactly. So, because you can leverage your balance sheet 5 times over, 10 times over, right, from an unfunded perspective. So imagine, for instance, it would be much easier as a commercial bank or microfinance bank for me to lend to businesses, knowing that, okay, a portion of that loan, right, is covered by the government in the event of a default.
Some sort of risk sharing type.
Risk sharing, thank you.
Okay.
Absolutely. Those are the kind of things where government, without putting a penny or putting its name behind, right, or balance sheet behind this, can then help to do what? Create the capital, right, required to get these businesses to be able to produce.
I see.
You see, I mean, I'll tell you another point. When the National Assembly, I think it was, decided that they did not want cars from Coscharis. All right, was it Coscharis or the other guy? I can't remember. The guy that produces cars now.
Innocent,
exactly. And said, we don't want cars from Innocent. We want Japanese cars, etc. I thought that was not right.
Yeah.
You see, I thought that wasn't right. Okay. For instance, you cannot have national airlines and then for government for trips and whatever, you're flying BA and you're flying, then there is no way. There has to be some level of patriotism in Nigeria, right? In other words, there has to be a sense of, I need to use the Nigerian goods, for it to actually evolve and grow and become profitable and get better.
Yeah. So Sonnie, there's a question here. You may have even started to answer it and are widening. It says, following the closure of Nigerian land borders that has helped boost rice production, in your estimation, would you say the local rice industry can favorably compete with their global counterparts? But I want to expand that to, there are many other products. So you're saying, when you start thinking in terms of starting from self-sufficiency, before I open my border to other people, what,
absolutely.
I think the person is asking, do you think that there's a mechanism or there's a path that from stones inside the rice to actually having clean,
basmati, lovely rice, etc.
Basmati, lovely, yeah.
Okay, let me. Whoever asked that question, right? I don't know how old you are, but I'm gonna take you back, right? If I could take you back to check out the first Honda Civic, yeah, the Honda Civic, the first Honda Civic, that came out, right? Honda in those days in the 70s could only make bikes, yeah. Motorcycle. They had the CD175, CD195, etc. Then they started with the Civic. The Civic was a basic, ugly looking car that couldn't do probably more than maybe 40 miles an hour, max.
Hood of a car, compact.
Right, compact, little thing like that, exactly. But they started. Today, the Honda Accord, the Honda this, the Honda that, whatever, right? So reality is that if you don't patronize the Abakaliki rice, right, and civet and whatever, so that basically the profits that are being made from selling it can be reinvested back into the business, such that you have a better way of sieving the rice, a better way of storing it, and so on and so forth,
and all
that the quality becomes better and better and better, right? So, I mean, there is no business that starts on day one and become perfect. Guys, the first Apple Macintosh, if you saw it today, you wouldn't use it.
Correct.
Yeah. The first Apple, you saw it. It was a television, small little thing, etc. It's very different from what you see today. But the reason why it's different because what? The profits have been reinvested, and made what? Much better and better and better. So the reality is that the idea that, because X rice exists and it's better, means that we will never patronize the African or the rice we have, and expect that would now become a much better product automatically. It's not possible. Countries patronize what they have to make it better and better and better.
Absolutely.
All right. That is why, and that's the, to me, if I just expand that for a simple reason, it's one of the problems I have when I look at the Nigerian fabric and say that it's too loose. What I mean by that is that until the Nigerian can see himself or herself first as a Nigerian, as opposed to I am from Oyo, or I'm from this place or that place, and then from that one is now, well, what part of Oyo, and so on and so forth, right? Yeah. You're not seeing yourself as one unit to be able to say we're together to get better.
Correct.
All right, and that is why it's such a how do I put it, a very how do I break? It's like it's very fragmented in the way we approach things. And that's why our ability to actually use what is our biggest strength as a country, which is strength in numbers, right, actually ends up being our biggest weakness. Some people think that our biggest quality, or what people admire the country Nigeria, is because we have oil. No. Now, if you divide the number of people of Nigeria by oil, you're poor. Why people keep looking at Nigeria is because of the population, not just the population, but the young population that we have. But is that young population seeing themselves as Nigerians or different fragments of a country? Yeah. That's another question for another day.
Perfectly understood. Thanks for that. Well, I'll ask Yomi Ogunawa. I'm going to unmute you so you can ask Sonnie your question.
Okay. Good afternoon, everyone. Thank you very much, Sonnie, for the brilliant presentation. My question, you have actually hit some of my question. Looking at the effect of pandemic, do you think Nigerian government or CBN have done enough, if not too little, in terms of stimulus packages to SME businesses? Thank you.
So, Yami, thank you very much. Appreciate it. It's a very good question. I think that the initial response from the central bank has been as expected. They've put in the different funds available to support SMEs and even emergency loans for people. I think the issue for me is really how the ease of accessing those facilities. I think that's more of a problem than what the government has done. So, I don't know if you know, and you can tell me if you know anybody that has been successful in accessing any of those loans from the, that's been mentioned from the central bank. I don't know of anybody that has. So, from what I hear from the general chats, is really more the access to it. But was it the right response? Absolutely. And by the way, I wouldn't cap it by size, because I would think that it's the kind of thing that the central bank would probably set from a measured standpoint. So if you start with a 50 billion fund to actually support small businesses during COVID, and assuming it was accessible and easily accessible by these businesses, and they could actually come out and there would be testimonies to say, we've received it, it's helped us, etc. I see no reason why the central bank couldn't say, okay, let's set another tranche of another 50 billion or 100 billion to continue to support. So I think what we really need to be looking at, is the process by which people are able, or businesses are able, to access these loans. And I think I would actually come more from that perspective. But to answer your question directly, I think the response from the central bank or from the government has been the right response. I don't think they could have done much more.
Better. Yeah, Sonnie, it seems like you're right. There was that response. Maybe the reason why people don't see it is you don't put out the testimonials. There was no announcement of how many beneficiaries, or that it's completely drained out. And what possibly, if you could then have another 50 billion tranche, another additional tranche that would then
absolutely. Yeah.
So, all right. So if the people in government or who know them, those are the things that sort of help people
correct
trust
absolutely. Yeah. So if you're doing good things of that nature, then there should be some sort of public relations to let people know, or at least let the Nigerians know, what the impact is, and the fact that businesses are receiving it, and let's hear the testimonies. That's how it's helped.
Okay, fantastic. There's a second poll that is about to be run. If you could launch that, let me see, polling. All right. All right, it should be on right now. Thanks, Sonnie. So guys, take the second poll quickly so that we can jump back to the questions. And the question is, what sectors do you think are facing the biggest threats or challenges? Sectors facing biggest threats and challenges. And when that's done, I'll go back to reading some of the questions that have come up for Sonnie.
Yeah.
All right. Tourism, aviation in the wind, cinema, entertainment following, startup, small business. Nice. Good participation. Yep. All right. Keep going. About 50% have voted. Awesome. Thanks. Okay. Fantastic. About 90 people voting. Keep pressing. About 142 now. Lots more people have joined since the last poll. Please participate. It's funny thing, Sonnie, how we complain a lot, rightfully, for those in finance and other markets. We don't have data in Nigeria. You don't have data.
Yes.
And this may be the data you need to go and
that's so. But I think these guys are trying. Yemi, Kale and crew from the Nigerian Bureau of Statistics. I just think they should sort of like make the website easier to navigate. But you'll be surprised, they do have quite a bit of info on there. They're actually doing,
Yeah.
you know, they're trying. I mean,
They're trying. They are.
At least compared to where we were 10 years ago, bro.
Absolutely. Absolutely. You're doing thumbs up for all your projections in the past. All right.
Yeah. So, but yeah, I mean, the voting to me, even though it hasn't completed, is in line with what I would have thought.
Well, seen an
I mean, the voting pattern is in line with how I would. Yeah, this is how I would have voted. Definitely.
Okay. Awesome. All right, I'll wait for another 15 more seconds. Oh, it's done. Okay.
Yeah. And
I will share. All right. So, clear leader, 86% thought tourism aviation, no brainer there. Cinema, entertainment was the second one. Then oil and, no. Startups and small businesses at 50%.
Yes.
Oil and gas next. Then oil and gas, and then manufacturing. That's true. Manufacturing, and then real estate, construction, and financial services. We can still share that. Okay, so thanks everyone. It's sort of in line with much of what we're seeing also. Okay, so let me say, Ebuka, I'll be with you in a short while, Ebuka. All right, so. Okay, so Ebuka, I'm going to unmute you so you can ask your question of Sonnie, and then we'll go back to some of the things that I typed on. Ebuka, you can speak.
All right, thank you very much, Akin, and thank you to my host today. My question really is on a headline which I saw recently. I'm aware that Nigeria borrowed $3.4 billion from the IMF, largely to bridge revenue shortfalls for the budget. And I'm also aware that this loan was also to be focused on critical sectors of the economy, particularly health at this time. But I saw quite a worrying headline some days ago, which was the approval of financing for the construction of, or the reconstruction of the National Assembly complex, which I didn't think was a priority expenditure at this time, and then cut to the healthcare and education budgets. So I'd like Sonnie to comment on this in light of the need to borrow and channel to the most pressing sectors rather than to not so critical sectors now. Thank you.
So Ebuka, thanks for that. I think again, I think we're all smart enough to know that not everything we read in papers is, 100% correct. And more importantly is that it doesn't state, in that, or at least you haven't mentioned that, in that article, it mentions that, part of the 3.4 billion has been earmarked towards the reconstruction or rehabilitation of the National Assembly, or whatever. So I think we'll be cautious. I think it'll be foolhardy to immediately think that because we received 3.4, part of that was going to non-essential areas. And I think it would have been better that we wait for the government itself to give an account of how the 3.4 has been dispersed, if it has been fully dispersed. As you rightly said, it was an emergency borrowing. Obviously, you could argue that the projections that we had in terms of the impact of COVID-19 on Nigeria was probably much worse than what actually happened, right? Now, whether there's going to be a second wave or not, that's, for us to, we'll see. But I think the idea that government, has now already begun to use the money to do other things outside what is required, I think, that might be jumping too far. Let's wait, let's see, and see how, let the government itself give account, or at least, if anything, how it intends to fund those other, and I totally agree with you, non-essential areas at this point in time. I hope that answers your question.
Thank you.
All right. Thanks. So it seems like the questions are pouring in fast and furious in the last 2 minutes. I'm not sure how much extra time we're going to have, and I've just been sort of looking through everything, and so we can't take all of them. Sonnie, it's been fantastic. It almost sounds like this is the beginning of a conversation with you, rather than the end of it. And so I'm trying to look for maybe just one more question that sort of can summarize a number of, we have questions regarding external debt to, whether is external debt preferable to domestic, about how do you cope with technology taking over jobs, how to encourage elites patronizing made in Nigeria products in addition to governments, how should financial institutions navigate the times aside from shedding costs, what is investment community doing about infrastructure, soft infrastructure, something about NPR going down yet, CRR, CPR kept the same, isn't this counterproductive? And should the central bank, is the central bank doing enough to de-risk the real sector to encourage investment, to invest credit? So there are too many things. Oh,
Okay, so I would try and I heard kind of a few things you mentioned, and I'm just going to touch on things little by little. So is external debt and internal debt is better. It's easier to service, it's easier to manage, right? Which is why Nigerian bonds for domestic purposes will be AAA.NG, for instance, right? Because the government is able to repay that debt come what may, even if it had to print money to pay you, right? So that's that. Is the CBN doing enough in terms of de-risking the macroeconomic environment? Absolutely yes. The idea of the 1.5 trillion infrastructure company that they talked about, I think is a very good idea. But my only view on that is that the CBN should not create that institution as a company. If it's created as a company, it will be politicized. Right? It's too big a size of a company that you will not catch the attention of government and all kinds of interests. It would be better if it is created as a fund of funds and you get the best managers, all right, for whether it's housing, power, etc., to manage those funds independently as, basically public-private partnerships. That would be a better way to go. And that, I think, if the CBN goes that way, I can see a lot more happen in the infrastructure side of the country. I think what Dangote is doing on the refinery end it's very good. I think it would really help. I feel that what the government has done in terms of, which I think was done very classily, by the way, the removal of subsidies, petrol subsidies, for instance, that was no noise, no nothing, just out, right? I think that's fantastic. Okay, because what we were doing before, even a madman will look at us and say, you know what, you guys are crazy.
You guys are mad.
It made absolutely no sense at all, right? You sell petrol, you sell oil for X price, and then the cash.
I think it's having some network.
Oh, yeah. Just pause for a moment, you'll be back. It's one of those things, our shared experience in Nigeria is that we are prepared for anything. We know it will happen. We'll just exercise some patience and then we'll roll with the punches. So we'll give Sonnie a minute to try and reconnect. Okay. In the meanwhile, I think I can summarize some of the major points or the major thoughts that Sonnie has shared with us in the conversation about impact of the pandemic, the response of sub-Saharan African sovereign states, and the question as to whether we should focus more, should we go the direction of globalization, tightening our supply chains, ensuring that we have contracts, free trade agreements that will ensure that there's minimal disruption when future acts of God or whatever you want to call it happen? Or should we look inwards and close borders, go self-sufficient routes, that kind of thing? I think what we've heard today is we've heard a nuanced answer that it isn't one or the other. In fact, Sonnie says you start with self-sufficiency, you look inwards, you see all the things that you have any sort of comparative advantage in, or something that you have some sort of strategic, or it's of strategic importance to you, whether it's food, whether it's using your oil, whether it's adding value to your oil or your natural resources, including raw material, food and minerals and things like that, and build yourself a solid infrastructure, both hard infrastructure, ports, railway, roads, and things like that, power, and then also make sure you build the soft infrastructure, the business environment, an educated workforce, a healthy environment, a healthy population, healthy populace. And that if you build all that as you're driving towards self-sufficiency, so you can participate in the global marketplace, so that you can export sensibly, then when your borders are open, or when you get into these trade agreements or into these different global collaborations, then you can hold your own. You are able to then stand your ground and profit from that globalization. Otherwise, you set yourself up to be a dumping ground. You disrupt your jobs, employment markets, and investment flows. I think that was the big thing that I heard from Sonnie. And the second thing was that in order to, now that we have a country with a government with reduced revenues, reduced budgets, if you look at the GDP formula, it's not just government consumption, is government spending is just one part of it. So if government revenues are down, you see, you have three other parts: investing. And so if you could create an environment, enable an environment for investments to come into the country. He talked, for example, investing in reducing food waste, particularly where 6% of food production is wasted. That food waste, food agriculture is the highest component of our inflation. So if you reduce food waste, you reduce inflation, general inflation, you improve credits that can go to the marketplace, to small businesses and things like that. And then the cycle of job expansion, manufacturing expansion, jobs creation, disposable income and consumption, and I dare say more export-oriented businesses. You can then make up for that shortfall in government spending just by creating and investing in the right places within the country. So those are the big takeaways for me, in addition to all the small questions that he answered. So I'll hand over to our society executives to give their vote of thanks and take it away.
All right, Yemi, this is Banji, the president of CFA Society Nigeria. I would just like to say thank you to everyone that joined this webinar. I would like to say thank you to Akinyemi, and more importantly to Sonnie, for a very, very useful, very, very, fantastic time essentially this evening. We don't take it for granted that it's weekend and people had to dial in, but we just felt as a society that we should provide a platform for people to exchange knowledge, for us to discuss, and hopefully shape policy in our country. And that really is what we exist to do. And we will be providing more opportunities over time. So please stay glued to our social media, to all our channels, and you will see lots of webinars and lots of other things that we'll be discussing in the days ahead. So on behalf of the society, I'll just say thank you to everyone. Let's continue to stay safe, and hopefully life returns back to normal in no distant future. Thank you and have a good evening.